Welcome, welcome, welcome. We are again live, and today I have with me Christina. Christina is a mortgage agent, and she and I are going to talk about whether or not you need a checkup. So, Christina, before we dive into whether or not you need a checkup with our guests and our listeners, could you tell us more about yourself?
Absolutely, absolutely. Thank you for having me here on your live today. I'm Christina DeMarinis, and I am a mortgage agent. I work for the brokerage, the Financial Forum, and so for me, I love to help people, and that's why I love what I do so much. That's why I'm so passionate, especially about doing lives like this, because there are a lot of things that mortgage agents can do. Obviously, purchases, refinances, renewals, and lots of things like that. So I am very happy to show my expertise and maybe educate some people along the way.
Awesome. And our topic, I feel, is very relevant. Do you need a checkup? We go to the doctor at least on an annual basis to get our checkups in. For her vehicles, we do regular maintenance and checkups, right? For our homes, we want to make sure that everything is operating well. The same applies to our finances. Wouldn't you agree?
I would absolutely agree. I remember when we came up with this topic and we both kind of had light bulbs on and we were like, absolutely, this is what we should be talking about because it's so true. Nobody really thinks about their finances as something that they need to look at annually or semi-annually or any of those types of things, right? So I'm very happy because I completely agree with this.
Yeah, and it's not a set it and forget it type thing that we do, especially when it comes to our money, when it comes to our mortgages. We need to be looking at them on a regular basis. And as our lives change, we need to be reevaluating if our needs are being met, right? So from your end, Christina, what are some of the things that you would think should trigger a review of, for example, a mortgage or your debt or so forth?
Yep. So I think that the most obvious one would really be like if your mortgage is coming up to term. So that means that, in most cases, more so likely it's 5 years. Some people are choosing about like 2 or 3 year terms right now. So if you're up to that term, you're probably getting a letter from your lender that says, hey, do you want to renew? Sometimes it's like literally as simple as click this button in the email and that's it, right? So that's probably the first thing that triggers the conversations of renewals. That's the most obvious one. And then there's also things like life changes, or if you're looking for renovations, or your kids are going off to school. Something I like to think of it like something that you need a lump sum of money for that you might not have right now accessible, but you might have equity in your home. It's a perfect marriage, right? I think that that's another one of those triggers. I also think if you're like self-employed and your career path has changed, that's another time to look at that renewal as well. So yeah, how about
And and from your perspective, that is definitely triggers. But guess what? I have the same triggers on my side. If life has changed for you, whether it be marriage, whether it be a birth in your family, whether you change jobs, right? That means your financial obligations or financial situation has changed. If you, for example, got married, right? Now you're thinking about somebody else. If there's a new birth in your family, you're thinking
yep.
about somebody else. If if your life goals have changed, your career has changed, that means you might have even more exposure than before, because some people are employed, their employer might add in a critical illness or disability components to their benefit package. If you're self-employed, you now need to do that for yourself, right? So definitely these things are triggers. You
Yep.
mentioned debt, right? And debt is something that, especially here in Canada, I find that it will be something that you likely have throughout your lifetime at varying degrees, right?
Yep.
You might start out with a car loan, right? You might then take on a mortgage. You might want to invest in new real estate, right? So
Yep.
these are definitely triggers that will have you look at what your financial situation is, and a part of your financial toolbox is life insurance, critical illness, and disability coverage.
Yep. Yep. I love that. And you actually just mentioned something too of like what changes your life might need. And you mentioned like, marriage and kids and all those different things. I think that that's so important to touch on too when it comes to both insurance as you did and mortgages, right? Because you could have a mortgage on a home that's like a 1-bedroom condo right now. But, all of a sudden you meet somebody and now you're moving in with them and, your life moves quickly. And so I think it's really important to, leverage the equity that you have in the home that you're living in, that you own, that you're putting all this time and effort and obviously money into, right? There's ways that it can work for you. And I think that it's so important to make sure that you are moving your home finances in the same direction that your life is going, because it can really get ahead of you. And we speak about debts all the time, and your debts can really rack up very quickly, and your debts can easily get ahead of you. But if you do look at this refinance or renewal as a tool to help you in those moments, I think that's where a professional like myself really comes in handy, because I can think outside of the box. I can see bigger picture. I can do all these different, options and run different scenarios for you and the life that you are, moving towards and starting to settle into. So I really appreciate that note on, what life stage are you in now?
Yeah. And you mentioned moving towards, right? Because we all have our goals. We all have certain expectations. You mentioned, for example, a renovation. You might be planning to renovate your home. We need to plan in advance, be proactive with our planning. So, for example, if someone is coming up on a renewal, how soon or how early should they be looking at their financial situation in order to be ready for that renewal or ready for that refinance?
Yeah, I personally would say 12 months is really, really a good time to start looking at that refinance or renewal, whatever you might be choosing, right? I think that it's so important to look ahead and plan ahead. And, there might be things that let's say you're on a 5-year term, there might be things that you were doing 4 years ago that are not relevant today. Your job might have changed, your debts might have changed. All these different little aspects may have changed. And I think if you look at it 12 months in advance towards your renewal, I think you're giving yourself plenty of time. Number one, to restructure your finances if necessary. Number two, start gathering all of these different, points from myself that might put you in a better position moving forward. And that might be if your credit is, kind of taking a bit of a hit right now. Okay, let's put in a plan of how you can renew that credit or rebuild that credit, right? That can take some time. So if you give yourself 12 months, even 6 months, I think is really beneficial, because you can put yourself in a better situation. And that's not just for, your life in general, but that is for your mortgage that's renewing. That could be your terms, that could be your monthly payments, that could be all these different things that genuinely will affect your day-to-day life. And I can help you make small changes to do so. So I would say about 12 months. Do you,
Yeah.
when it comes to like the insurance, do you kind of have that too of like forward thinking, or is it more so like at the time of a life event?
Well, it's definitely forward thinking, right? Because we're not only thinking about what can happen today, we are thinking about what will happen in the future, whether we're planning for a purchase, whether we're planning to expand our family, whether we're looking at retirement, right? And the thing is, when you do this frequent or regular checkups, right, you're actually looking at what opportunities exist and what threats exist. And you don't want to be blindsided by anything in your future, right, to derail you and your plans, right? So it's always good to do that. I personally try to reach out to my clients for an annual review every year. And the reason why, especially if they have like a permanent policy, like for example, a universal life policy, where they're also using that tool to invest for their future, I want to chat with them to see that they're happy with the performance, and if not, how they can change it to ensure that they are better prepared for the future by using these tools. and reviewing them regularly to ensure that they are working as how they want them to.
Yeah. Yeah. I think that that's all really, really great advice. It's so funny to me how similar like mortgages and insurance are, and how forward thinking, and how, you know, making sure that you are taking steps to work towards your goals are very, very aligned when it comes to both of our industries. So that's really good. Um, yeah. I did have a question actually, and I don't know the answer to this, so I'm kind of intrigued. When it comes to like, you know, forward thinking and updating your policy or anything like that, um, are there like penalties for doing so at any particular time? Like if you were to do it, I don't know, say like too early. I'm not sure if that would be the right terms, but
Mhm.
if you were to do it in, you know, sooner than maybe you would need to, are there penalties for that, or is it kind of just like you can update whenever?
Well, you can update your policy whenever. And when I say update, you're reviewing your total coverage, right? For
Yeah.
example, if for some reason your retirement goals have changed, right? Instead of
Mhm.
maybe using some products that are maybe not as tax efficient as others, you look at your insurance as a tool to maybe put more into as
Yeah.
to fund your retirement. There is no penalty for that. If you have a term policy or you can cancel up that kind of a policy anytime,
Okay.
right? If you have a whole life or a universal life policy, you will probably have some clauses that dictate how you treat your policy, whether it be a
Okay.
forfeiture or whether it be a withdrawal. There are certain terms that might have other implications, right? For
I
example,
see.
tax implications, as well as how it would impact your fund value at a particular period of time. So always reach out to your advisor if you're looking at making such a decision. Just like if somebody's looking at their mortgage and thinking, oh, maybe it's time, maybe I want to refinance early, they'd reach out to you to see what are the
Mhm.
pros and the cons of doing so. So
Yeah.
likewise, if you're evaluating your insurance coverage, talk to your advisor so you can both chat about what the pros and the cons might be and what might be best for you in your current situation.
Yeah, absolutely. And I think the key point to both of us on this is really like know your options. Don't just, you know, kind of sit back and let things come to you when it comes to either your insurance or your mortgage. Don't let that be the case. You know, really explore your options, because you don't know what's out there and what could be better suited for you and your lifestyle today. If you don't go out and you don't ask the questions, you will not know. And there almost always is going to be something more suited towards you that will benefit you, whether again it be those rates or whether it be your monthly payments or any of that, right? I think have conversations, forward plan, know your options is such a key piece to both of us when it comes to, you know, doing those checkups.
Yeah. And I think there is no disadvantage to being prepared.
There really isn't. There really isn't. And you know, even I think just in life in general, it's always good to be prepared and do your research and all of that. So why make it be different for your finances?
Exactly. And it doesn't mean that with every conversation you have to make a decision, but with every conversation, get more aware, more informed about what your options are, right? So,
Yep.
example for a mortgage, people don't know that if they've built up significant cash value inside of their insurance policy, that's a way to help them with maybe a deposit. Or some people use their policies as their own banks somewhat, right? So it's always about understanding what your options are and creating even more options for yourself with the available tools. Get informed, understand how they work at different phases of your life, right?
Yeah. Yeah, and I think that that's a great takeaway, and that is a great take on it all. And information is key. Both of us really love to educate our clients, and I think that's why we like to do these lives every so often, right? We want to get people thinking. We want to talk about things that you might not even be thinking about, because you know
Mhm.
what would we be if we weren't educators as well, right?
What would we be? And again, it's so important, right? Because being ready, being prepared could actually mean the difference between a catastrophe or a financial catastrophe and financial success, right?
Yeah.
And we are here to help our clients through every aspect of their lives. You can help a client with financing their kids' education by
Yep.
accessing equity. I can help a client do the same thing by using their insurance policy to store that wealth and have it grow over time for their kids, or even leverage the same fund value for financing for that type of opportunity. So it's different tools to accomplish the same goal or to work together to accelerate your wealth creation.
I love it. I love it. We're just a good tag team duo. We can do it
Yeah.
all.
All right. So, Christina, do you have any final thoughts, any final tips for our listeners when it comes to checking up on their finances, checking up on their debts, their assets, their liabilities?
I would say one last thing to reiterate is when it comes to, checking up, don't leave it to the last minute. Make sure that you are thinking about it. And, like you said, no conversation has to lead to specific decisions. And I'm happy to just have conversations and educate and push you towards a better life. That's really my goal at the end of the day. And a healthy checkup will do that for you.
Yeah, I agree. So definitely check up on your current situation. Don't cover your face and hide from what your situation is. Face your current circumstances head on, be prepared, right?
Yep.
Put the safety nets that you need in place for yourself and your family. And guess what? The other thing is also be organized. When you stop and check and have your information easily accessible, especially, for example, for insurance policies, be organized, know where things are. So if you need to
Yep.
grab them quickly, you can access them. If you're going for a renewal, have all those things that a mortgage agent will ask for handy so you're prepared. So reach out to Christina if you need some advice about your mortgages, debt consolidation, funding, renovation, or you're just thinking about buying a property in the future. Christina, how can they get in touch with you?
Yeah, so there's a whole reel down below. Christina at thefinancialforum.ca is my email, or you can give me a shout at 416-274-1502.
And I can be reached at 647-951-6905 or info at moneymattersca.com. Thank you so much for listening. Reach out if you have any questions. Christina is on our social media platforms. You can DM her there, and so am I.
Perfect. Thank you again.
Thank you too, Christina, and thank you to our listeners. Bye.
Bye-bye.